Hi, I'm RJ Baxter with Fairway Independent Mortgage, and I want to talk today about your home equity line of credit, or HELOC, and whether or not your interest rate is going up on your HELOC. So first of all, I just want to rewind a second and explain what a HELOC is, because that term is used a little bit ambiguously around the lending world and around homeowners and borrowers. And basically, a home equity loan is any loan that enables you to tap into your equity. So for example, it could be a fixed rate second lien on your home. Second lien meaning it's subordinate to your primary mortgage, so it's a second mortgage on your property. And a home equity line of credit, commonly called a HELOC, that's a revolving line of credit that you can borrow against, pay down, borrow against it again, pay it down again, kind of like a credit card, but it's a lien on your house. It's also a second lien on your house, typically subordinate to your primary loan. Now, some people have home equity lines of credit and don't have a primary loan, which is completely fine. But the common thing is it's a second lien on your property. So is your home equity loan, line of credit, or HELOC rate going up? The answer is probably it is, and it probably already has. So home equity lines of credit are typically tied to the prime rate. The prime rate is a rate that's tied to a lot of different things, like credit cards, for example. And when the Federal Reserve announces that they're raising rates, they're raising short-term interest rates. It's literally the rate that banks use to lend money to each other overnight. So it's a very short-term rate. But when the Fed hikes rates, I can't even think of a time ever in my 20-year career that this hasn't happened. When the Fed raises or lowers rates, the prime rate soon follows thereafter. Within a week or two after the Fed making their move, the prime rate moves by the same amount. So when that happens, your home equity line of credit rate will go up as well. So for example, the Fed, they hiked rates by 0.25% in the middle of March. So it's likely that your home equity line of credit interest rate went up and you're paying a little bit more in interest. And I said it's likely that it's going to go up even more. The Fed is already telegraphing that they're probably going to raise rates some more heading into the rest of 2022. They have quite a few more meetings coming up, and they want to raise rates to try to combat inflation. They want to try to slow down the economy a little bit by making it more expensive to borrow. So if you're looking at your home equity line of credit and your rate is going up and you want to look at options on how to get out of it before the rate gets too high, give me a call. We can definitely talk about that, talk about consolidating your debts into one loan that you can use also as a mortgage interest tax deduction on your taxes, most likely. Now, I'm not a CPA, so don't take that as tax advice. But call me. We can talk about some different options, and you can find my number and my email around this video. And you guys have a great rest of your day. I appreciate you watching.